Welcome to a very informative episode of the Ranveer Show. As a podcast host, I'm very conscious of the fact that audiences are evolving at a very fast rate. People know the basics of personal finance. Everybody nowadays knows how to handle their money. Heck, I even believe people know the basics of how to operate in the stock market. So, in this particular episode, we brought on a stock market expert who's also a fintech entrepreneur to talk about the stock market from both a basic level and advanced level, and bring in a level of conversation which we are bringing to the Ranveer Show for the first time, which is bits of current affairs, bits of what's happening in the world in the modern day. Whether or not you're interested in financial education, I promise you're going to gain from this particular episode with one of the most learned people we've had on the show, Mr. Vivek Bajaj. His two organizations, elearnmarkets.com and StockEdge.com, have made a huge mark in the financial services sector. Remember to use the coupon code BeerBiceps to gain benefits from these two fintech products. What do the companies do? Who Vivek Bajaj is? How he looks at the world of finance? How he looks at money? I'm going to let you guys discover for yourself. Guys, the one thing I also want to highlight about this episode, other than everything else that I've highlighted, is that we will be addressing the money-making opportunities in 2022. And you want to watch the entire episode or consume the entire episode if you want to learn about the opportunities from a 360-degree perspective. It's not just enough to get tips when it comes to finances and tips when it comes to the stock market. You need to learn how things work. So here you've got someone with a lot of years of experience telling you that if you want to make money in the stock market or money through your investments, this is how you do it. What I promise you is that this will be a very key conversation in shaping up how you look at personal finance or financial education. It was a very important conversation for me from a financial education perspective, and I'm sure that it'll be the same for you. Remember to follow the Ranveer Show on Spotify because we're a Spotify exclusive now. All these informative episodes will be available on Spotify 48 hours before it's available anywhere else in the world. So without further ado, this is Vivek Bajaj, featured on The Ranveer Show. He's also a YouTuber, which makes it all the better. Enjoy. Mr. Vivek Bajaj, welcome to the Ranveer Show.
Hi, how are you?
Sir, has anyone ever cracked this joke with you where they tell you that you sound like a really rich person just because of your name?
Yeah, because of the Bajaj, I guess. Unfortunately, not related to them.
I think today I'm going to learn more deeply about the stock market. I'm going to learn more deeply about the world of finance. Because I spoke to a friend of mine, Nikhil Kamath of Zerodha, and I asked him that what is the big life gift of being in the world of finance in terms of how does it benefit you as a person? And he said that you get a very clean picture of what's happening in India and the world from an economic perspective. Also, you can study what's happening in people's minds. And also, obviously, if you learn the game, there's a lot of money to be made. But from a life perspective, it's this. You get to understand what's happening out there. So that's what we're going to do today, sir.
Amazing.
This is the 2022 and maybe 2023 money-making plan for the audience. So keeping that in mind, what has COVID done to your world of finance?
What has COVID done? Actually, what has happened was overdue. If you see finance, it's the most basic life skill everyone should know. And COVID has pushed that need of knowing this life skill. And this was ought to happen.
Because people lost their jobs, therefore they figured, instead of going for a job, you can actually make money here.
Correct. And people who lost the job, they had money. So they were thinking that, what do I do with this money? Right? From all angle. People who didn't have a career, they were thinking, this is such a stable career. I am always there. Whatever happens, I can still pursue this career. So everything changed. From education perspective, look at the way people have gone ahead and started learning about this subject. Because finance is our heartbeat, right? We have to know about it. Because today you may not have job, tomorrow you have job. Finally, your money should make more money out of it, right? So how do you deal with it is something which people have realized and people have gone on it basically.
Yeah. I want to highlight 3 learnings of mine from this past 2-year period of learning finance. One, there was a massive finance boom.
Yeah.
in content. People were learning aggressively about finance and the stock market. That led me also to learn. And what I figured is that making money through stocks or through knowledge about the world of finance is very disciplinary. What I mean is there's a certain set of rules and patterns, and if you follow those patterns, if you figure them out over time, and if you continuously follow them, you will make money. It's not as risky as people think. And a lot of people don't enter the stock market out of that fear of, oh, I won't be able to learn the skill or I'll lose money. You know, they think of it as jua, as gambling, but it's not that. If someone teaches you how to bat, you'll be able to bat well. That's the first learning, that this is a very learnable skill. If you're just slightly disciplined, you're not supposed to use much creativity. You use a set of rules. The second thing I figured is, actually Ankur Warikoo made a video on this recently. He said that he gave a chart for financial independence by the age of 30. And I believe it was somewhere around the range of 1 crore. As in, if you earn 1 crore rupees, with that amount of money, considering all your expenses also, if you are able to save up around 1 crore, you're actually set for life. You can even plan for your retirement with just that 1 crore. And he explained how in that video, which is quite doable, if not by the age of 30, by the age of 40, for a lot of the listeners, for a lot of the Indian population. So that financial independence goal is in reach for a lot of young kids, and they need to understand that. And the third thing I understood is that just right now, people have understood the basics and they want to learn the advanced aspects of the stock market, of the world of finance, which is where you come in, Mr. Vivek Bajaj. So teach us that as well. Like, you know, beyond the basics of learning those disciplines, what happens to a trader in the long term? What happens to the mind? How are you supposed to keep up with the game? Because in many ways, it's like a sport.
It is. It is a sports. Whenever I'm speaking to the new investor in the market, I always give an example of Mahendra Singh Dhoni. That why Dhoni is probably technically not a very superior cricketer who would believe that helicopter shot would exist. But he was the one who is now known to be one of the greatest cricketer India has seen. Why? Because of his perfect combination of skill and temperament. Right. So stock market is exactly that. So when you are entering stock market, consider that you are entering a serious sports activity, and you have to do all kind of things which a typical professional sports person will do. Let me just talk about that point number one. You mentioned that we were always scared about stock market. That was because I belong to a generation where my father figure, they have always told us to stay away from stock market. And we can't blame them for that, because they have seen Harshad Mehta, they have seen Ketan Parekh, and people have lost a lot of money, right, when market was not so regulated. So we were always told, even, you know, my father, he's in stock market and I am in stock market, but my father used to tell me, don't come to stock market. Padhai likhai karo and just try to do something else, which was irony. Why will my father, who has made his livelihood to stock market, asking his son not to come to stock market? It's like a doctor's son. Doctor is saying, don't come to the doctor occupation. So that generation has seen the tough time because market was not regulated. We, as well as the next generation, is seeing a much better, cleaner, structured and rule-driven market. So learning makes a lot of sense now, because participation is bound to go up. And it's a life skill, as I said, that if you want to succeed in your career, stock market is not just for investment, no. We have this misconception that I need to learn stock market because I need to invest. That's not the right approach. It's for your career. If you know stock market, you know various industries, you know what is happening in the new world, then you can plan your career accordingly.
If you want to get into business later, knowing the stock market in detail is a great life skill that will lead to business or another profession.
Yeah, it could be job.
Maybe a profession that doesn't even exist right now.
Right.
And you can predict it.
Correct.
So, like, you know, what can Gen Z expect? Chalo, if they want to get into the stock market right now, like how you said, once regulations were introduced for your generation, that made things cleaner and more learning oriented. That chalo, you learn the correct technique to bat, and then you'll be able to score hundreds. What would you say to Gen Z? What's going to change now going forward in the stock market?
See, overall environment, if you see in the coming few years, technology is scaling up things like anything. Because of that, cost of a lot of things is going up. Now, in a almost negligible real interest rate scenario, if you have to beat your investments or money-making opportunities from the investments, where do you go? Stock market is the place where you have to explore opportunities. And the beauty of stock market is that there is opportunity in every crisis. So when COVID happened, major crisis, no one was expecting it. And after the crisis, people said that things will go bad and market will crash. But then there were a lot of companies and sectors who got benefit because of the crisis. For example, financial inclusion. So broking firms did good, banking overall did good, and demat account, CDSL did good. Why? Because work from home, trade from home, that became the most obvious thing, and these companies got the benefit. Or pharma sector did well because suddenly everyone was talking about pharma. Or hospital sectors could. So in every crisis, there is an opportunity.
Yeah, it's also parallel with the world of content. When something happens, you make content around it, you'll gain numbers.
Yeah.
And one thing I figured is there are some parallels between the world of content and the world of finance. But keeping that in mind, because we're making finance content, let's actually answer that question right now. And I have so many more questions about India, about where the country is going, vagera. Again, for that Gen Z kid who is probably 20, 21 years old now, has 10,000 rupees, wants to get into the stock market. How would you go about it? I'm even asking you in terms of how would you learn those first few skills? And then how would you actually apply it in the stock market at your age now? You're in your early 40s now. And I'm sure you're very different from how you were at 19, 20. And I'm also sure you've learned from your mistakes.
Yeah, of course.
What are the mistakes you want to talk about? What is the strategy you want to talk about to a 21-year-old in 2021?
Okay. So first thing first, we have to understand we are here in this market to make a 50-year career. So we are 21 and we will be there in the market till the age of say 70. That means we have 50 years. So we should not be in a hurry. Yeah. You don't want to make quick bucks in 4 to 5 months. Stock market is not a video game where we aspire to make quick bucks. So take your time in understanding what is happening in the market. Secondly, because your capital base is small, don't expect fireworks. Don't expect that you'll make 10 lakh in couple of months or years just with 10,000 rupees. So you have to increase that capital allocation from 10,000 to 20,000, 25,000, 40,000.
As in take small risks. Try make a profit of 1,000 rupees, 1,000
Correct.
Build it up to 20.
Correct.
Once you're at 20, make profits of maybe 1,200.
Correct.
Build it up to 30. And then gradually keep increasing with how much money you're playing.
Correct. So there will be two things. One is you make money out of the capital which you have. And at the same time, you're gaining confidence because market really values experience and confidence. So once you are doing that, your ability to deploy more capital goes up. So if you started with 10,000 and suppose you made 2,000 out of it, 12,000 you made, 2,000 may be a very small number because now everyone has a very flamboyant lifestyle. So for us, 2,000 will be like only one dinner. But you don't understand the power of this 2,000 making money to your confidence. So after a point of time, maybe after 1 quarter or 2 quarter, you may actually think of allocating more capital. So from 10,000, you then go to 20,000 further, then 50,000 further. So that at some point of time, you can actually tell your near and dear ones that why don't you give me your capital? I've learned this art of managing it well and I'll manage it for you.
I want to highlight a cricket example again. You see in the IPL, there's a lot of young cricketers who come out, Yashasvi Jaiswal, Sarfaraz Khan, these young good batsmen. They're never allowed to open the batting. Very rarely. Yashasvi Jaiswal, exception. Most of them are told to bat at number 5 and end the innings. It's okay if you get out a few times. And then the next season, that same batsman who's batted at number 6 or number 7 starts batting at number 4 or 3. Bats there for a few seasons. And then eventually, you decide that, okay, I'm good enough now to open the batting. And then you become an opener. And this is what we've seen in Rohit Sharma's career also. In the T20 World Cup in 2007, he was the number 6 batsman, I believe. And then gradually worked his way up the order. Because you score a few runs, you gain confidence, you go to that next level. And then once you're the opening batsman, you know how cricket works. So therefore, you take risks. Therefore, you even try hitting Brett Lee and Glenn McGrath for sixes. So stock market from the outside seems exactly like this. That do not focus on flamboyance at the start because you're seeing people your age on social media making a lot of money. That's a whole different world. That's a whole different skill set. Also, the other kind of psychological and life point I'd like to highlight here is everyone has a different timeline to their storyline. So for young college kids, stop comparing yourselves to people your age who are probably social media stars. They have a different timeline. But if you play well in the stock market, you might have a career at 30 when that person won't. And your career might go on till 70 when that person would have long been gone. So perceive your own game like that. And to do that, work on your temperament a lot more than just flamboyance at the start.
Correct. Absolutely. Bang on.
So but specifically with those 10,000 rupees, what would you say? Do you spend some money on a course? Do you go to a mentor? What would you do if you had 10,000 rupees in your hand?
See, there are a lot of good content creators who are giving their best content online these days. I mean, I also record a lot of content in my YouTube channel. So technically with 10,000, there is no point in going to a mentor or a course to start off with. It's good to go through all the free content, where I find out the right source of free content and go through it and start deploying this 10,000 rupees, not in one go. The market is the biggest mentor. Until as you swim, you will not learn swimming. I can teach you from behind the door, but so best way to start is deploy in in a mutual fund. Start with it. 500 rupees in a mutual fund. You will feel good about that process of deploying that 500 rupees. And then look at that mutual fund where you have invested. Look at the stocks where the mutual fund has invested. All the informations are available in multiple public products these days. And when you look at those stocks, you start questioning yourself that, oh, what is this company into? Is this company is into X industry, Y industry? So imagine a mutual fund where you have invested 500 rupees only, and they have invested in 50 stocks. With 500 rupees, you get an opportunity to know about 50 stocks. You should have a curiosity that, oh, I should know about this 50 stock. What are they into? And then after that curiosity, you gain confidence. Oh, these looks interesting. Let me try with another 500. Let me try with another. Because the beauty of stock market or mutual fund is that this 500 rupee will not vanish. Because mutual fund, you will not see a major drawdown in a couple of days. So you can keep on allocating 500, 500, 500. And you make a portfolio of say 5,000 rupees to start with. And you have an understanding of 50 stock. Once you develop that confidence that yes, I do understand, then you start getting into allocating more capital.
I'm assuming that a lot of the listeners know these terms by this point, but if someone doesn't understand the term mutual fund, it means basically a company which manages your money for you basically.
Yeah.
Where there are experienced stock traders in that company. So that 500 rupees will be divided into a bunch of companies. And even if some of those companies lose or if some of those companies win, it's very likely that overall on an average you will win.
Yeah.
Because of the averaging out of all those 50 companies that the mutual fund invests in. But now we will carry on with the more advanced stuff.
Yeah, this is about investing. But there are certain people who want to be actively involved in trading. So investing is like you park your money for a longer term wealth creation. And trading is that you want to be part of the market right there, right now.
So I also feel there's like 3 levels of investing. Just want to add that. The first is the kind of investing you spoke about, where you invest with mutual funds, where you're guaranteed some amount of money. The second is later on in life, you go to a portfolio management service and they invest your money for you. But again, the minimums there are like, I think 10 lakh?
PMS is 50 lakhs.
50 lakhs?
Yeah.
Okay. I think it used to be lesser.
It used to be 25 lakhs.
Yeah, it used to be 25. Now it's like become 50 lakhs.
Yeah.
So, and then, once you make that kind of money in life and if you don't want to manage money yourself, PMS, I feel is the way to go. At least I've been advised so.
Yeah.
The third way of long-term investments is your blue chip stocks.
Yeah.
As in stocks where you know that, okay, this company is definitely going to grow. Great example of that is Tesla with what's happening internationally.
Yeah.
Great example of that is Reliance because of the track record of Reliance and everything that they're trying to do.
Yeah.
Tata. Like which Tata?
Take any Tata stock, yeah. I mean, they have done so well in last 1 year.
Yeah. So these stocks, you know that if you park your money there, it will grow with time. One thing I've learned is that the second way of looking at investing money is daily trading, where you're supposed to look at the green waves.
Yeah.
In terms of you have a chance to make more money by trading regularly than by just holding on to stocks in the long term. Yeah. If you understand how markets work. And this is the skill we're trying to highlight.
Correct.
How do you crack that skill of daily trading?
Correct.
So one thing I've understood is you ride the green waves.
Yeah.
Am I right in saying that?
Yeah.
When something's going up, you let it go up for some time. And then once you really see it going up and you feel like, yes, I can take a bet on it. You bet on that, riding that green wave.
Yeah.
And similarly with the red waves, you don't immediately drop it off. But after it's been dropping for a while, then you drop it off.
Yeah.
You pull your money out of that.
Yeah.
And eventually the skill of the stock market is that you can sort of almost do a little bit of pattern recognition.
Yeah.
Because you've done it for that long.
Yeah.
Please correct me if I'm wrong, sir.
No, you are. I'm actually quite surprised. Your explanation is absolutely bang on.
Okay.
When you are trading the market, for you don't care which company you are trading. It's the price behavior, it's the stock price which you are trading. So it could be Tesla you are trading, or could be Reliance, or any company you are trading, which is the price you are trading. And price is the reflection of the law of demand. which is if there are more buyers, price will go up. If there are more sellers, price will go down.
Which is why you need to understand the stock market from behind the scenes.
Yeah.
In terms of you are seeing names, numbers of companies. But if you also read the news, if you also understand other industries, if you have friends in other industries who tell you that, this company is making a great product and it's likely that their stock price is going to go up.
Yeah.
I'm guessing that's the next layer.
That's the, so let's divide this into investing and trading. So what you are saying is more valid for investing because you are investing in the product of the company or the business of the company. But when you are trading, it doesn't matter that what the company is making or what announcement company is going to make, because the price, which is already behaving in a certain manner, is a reflection of the performance of the company. So these are two different things.
Okay.
Either you are investing where you're looking at the business, or you are trading where you're looking at the price.
Okay. Can you highlight that trading where you're looking at the price a little more in terms of what does that really mean?
Yeah. So price means what market is perceiving that this should be the price of that instrument right now.
Based on what the company has done in the recent past?
No.
Then?
I mean,
It's
it
mathematical.
could be. Yeah, it's mathematics.
Okay.
Could be because of that. But when someone is trading, the person is not trying to relate the price behavior with actions which is done by the company.
It's very mathematical, methodical.
Yeah.
Like you are just seeing the numbers.
Adjusting the numbers.
Video game.
Yeah. We are not trying to relate price that today price went up because this happened. No. Always assumption is that price has all these information embedded because someone who is better in the market, better than me, has already acted on the price, and price is a reflection of that action. Your role is to figure out that what will happen to the price next. So it's more maths. It has nothing to do with the company.
And how do you figure it out?
That there is a science. There is a science which is derived out of law of demand and supply. That if we know that there are more buyers in the stock right now at this moment, then the chances that price will go up is high. So you also become the buyer. Now, how do you know whether there are more buyers or sellers? There is a science which is called technical analysis.
This is why they say don't apply creativity in the stock market. Follow the set rules.
If you reach that point when you are able to define the rule and you follow it, that's like the ultimate stage of your, it's like a nirvana moment that, yes, I've been able to crack that code.
Is that why people look up to Nikhil Kamath and Rakesh Jhunjhunwala that much? Because those guys have reached some certain mental stage where...
Absolutely.
Okay. Could you describe that a little more? What makes these two men special? Because I keep hearing these two men's names.
I don't know much about Nikhil Kamath, his style of trading. Rakesh Jhunjhunwala I know because I've seen him growing. So what makes him special is his uncanny ability to not just understand the company and the business, but also to understand the sentiment inside the stock price. And sentiment looks very vague term, no? That how do I measure the sentiment? But sentiment is a reflection of the kind of buyers and sellers who are there in that stock. Sentiment is a reflection of whether that price is perceived to be the right price or the wrong price.
So his study of people.
His study of people. You remember market was pit trading, which was outcry system. So people used to shout. And I was part of that generation also because I've seen my father in Calcutta Stock Exchange shouting and making all kind of hand gesture.
We've
you
seen
remember that
in the
movie?
Harshad Mehta show.
Harshad Mehta show. So, or that Guru movie where people were shouting in that mandi. And all kind of hand gestures were made that time. Every gesture was talking about something. And people used to read the other counterparty through their body language, through their hand gesture. This people who have lived that era of reading humans, reading the body language, have been able to adapt market in a much better manner. Now it's totally electronic. That means you have only price in front of you. How do you judge the buyer and seller based on the price which you are getting? That is a different science. Rakesh Jhunjhunwala is special because he has been able to transit himself from that outcry to electronic trading. Nikhil Kamath, probably he has been able to decode that screen-based trading in early part of his life. And I will not deny that it's a God's gifted at times for people. It's also part of genes where if your father has been doing it, it becomes natural for you to adapt it fast. But this is a skill one can garner easily.
Speaking about Rakesh Jhunjhunwala and Nikhil Kamath, I also want to bring back the example of MS Dhoni you brought up earlier on the show. You said that you need a basic level of skills, the science of the stock market, which is very mathematical, very methodical. Someone needs to just tell you that these are the things you always have to follow for the rest of your life. Then you need temperament, which is why you brought up Dhoni, and you said that maybe he's not the most talented cricketer ever, but his combination of temperament and skills is what has taken him to the top. Also, there's one more thing I would like to add to Dhoni's skill set, which I see is common with what you say about Rakesh Jhunjhunwala, which is observational ability.
Yeah.
Observing other people. Have you seen all those videos of Dhoni magic moments behind the stumps where he indicates something to his bowlers? He says that, no, do this. He's actually built many bowlers his careers. Kuldeep Yadav, Mohit Sharma, the late part of Harbhajan Singh's career, Ashwin, because he's worked with them in order to get them more wickets. That's why Dhoni is also such a respected captain. That basically boils down to studying your opponent, studying body language, studying the situation, observing very calmly. The less calm that's in your head, the less the observation ability also. The more calm, the more the observation ability. You never see Dhoni reacting on the field.
Yeah.
He just acts. He responds to situations.
And stock market is such a place which will always give you uneasy situations. The real differentiation comes, how do you react when situation is bad? The market went down by say 4% today. How many people will be calm, composed, smiling? Very few. And most of the time people who lose money, they will get disturbed mentally, they will react, they will show all kind of body language, which is not, and market doesn't like those kind of body languages. See, for us, when I was young and I belong to that generation of Nikhil Kamaths of the world, I have seen my father talking to market when it was online market. So my father talking to market, my brother who's a trader, he's been trading since the age of 16 and he's right now 48. These guys talk to market. In the screen, they look at screen and say to the market that, why did you make me wrong today? Oh, wow, what a lovely trade I did. Pat in the back. So they're talking to market. So for me, market is also an entity. It's a personality. And if your personality matches well with that personality, then you are here for a long wealth creation.
I always see like I am not built for stock trading because I'm not a number oriented person. And that's why I don't want to learn the batting also. And it's fine. Like my money is coming from other places. But I do believe that in terms of temperament, it's basically what you said, right? Like it's you stay calm. Is that what you mean by personality fit? And the reason I ask you this is to help the listeners understand whether or not they are built for the market. So could you list out what you need? I'm guessing you need to love numbers, you need to love data, you need to love studying different industries.
Correct.
But in terms of temperament, what do you need? And can you build up those things when it comes to temperament?
So how do you build temperament? So most of the time, things which are unknown in our life, we are always worried about those things. The moment we get the knowledge of that thing, we become very comfortable with it. Temperament also is something which for each occupation, if a chartered accountant will have a different temperament, an IITN will have a different, depending upon the occupation that person has. So you need to spend some time in the market to realize what kind of temperament you have and what aspect of market fits you well. So your temperament cannot be measured. There is no tool which says that this is what you are and this much risk you can take, or this much, you will have so much of nervousness if you lose this much money. So it takes some time to be there in the market, and it comes naturally that, okay, I'm meant to do this and I'll do only this in the market. But the problem is people don't conclude that. They're fighting with the market all the time. Ki, Arey, aise kaise hoga? Why is this not happening with me? Maybe you're not made for that. And that will happen over a period of time. And I will also say that people should also be open to the idea of quitting the market. Maybe it's not meant for you. Why are you fighting? Maybe your neighbor was born to make his career in this market. Why are you worried that he made a lot of money and you are not able to make money? So temperament, I can't give a mathematical equation that this is exactly what is needed, because it also depends upon your risk appetite, your background, how much money do you have to lose. Because in market, we always say that if you save losing money, you will make money. The problem in market is people lose money and get out. The moment you restrict that losses in the market, automatically you'll make money because the character of market is that it will give you money.
You know, when they say ये बर्बाद हो गया stock market की वजह से, when you talk about someone who's lost all their wealth in the stock market, I think it's an outcome of situations like this,
Yeah.
where you're forcing yourself to be there.
Yeah.
There's a story where someone had once asked the Buddha, hey Buddha, I want happiness. And the Buddha responded by saying, okay, if you want happiness, remember this. You said, I want happiness. Remove the I, you're removing the ego. Remove the want, you're removing desire. And you're left with happiness. And I would apply the same rule to I want money.
Yeah.
In the stock market.
Yeah.
You say, I want money. Remove the I, you're removing the ego. So learn all the skills, be very humble about it. And remove the want. Therefore, you're removing that inner urge and you're working on your temperament by removing the want. You're being a little detached almost from it. You're approaching it mechanically.
Correct. Correct.
Would you agree? It's like
Yes, absolutely. Absolutely. I think it's a universal truth which works in everything. And market is not very different. We just have to.
Yeah. But also in saying that, I don't want to discourage young investors from investing in the stock market, at least as long-term investors.
See, we are talking about trading, huh? Whatever interaction we had, because trading is a very different ball game. Investing is like you have to do it.
Yeah.
It's no choice.
What is equity investment for, you know, someone who's just beginning in this world?
Okay, so equity investment is when you are investing in any company, believing that the company will grow in future, right? You become owner of that company by buying one share of that company. So if you believe that Reliance is doing incredible work,
This
in
is where
Jio,
you have to focus on the product of the businesses.
of course, because product drives the growth. And making presumptions about the future potential of the product is the art, which will differentiate me with Rakesh Jhunjhunwala, because he can make a much better prediction about Titan or Tata Motor than I, because I am not well read. I probably have not so much of exposure. He has many people around him who is giving him constant feed. So are you part of a good network? Are you part of that, classic circle of good influence, which is giving you right feeds in your mind so that you are channelizing that knowledge for the right stock identification?
Yeah, for sure. What people don't understand is they talk about high risk, high investments. I just want to paint a real picture of what's happening in the content creation world right now. So there's content creators who are earning money. Everyone's earning money in this industry. There's a lot of them who are spending money on cars and clothes and all these things. And then there's a few content creators who have kept a significant portion of their earnings on the side, say about 1 crore of rupees. Okay. Divide that into 5 lakh or 10 lakh packets. So that gives you what? 25 lakh packets. They're investing 5 lakhs in 20 startups.
Yeah.
Now, even if one of those startups takes off, you have probably made 5 crores at least from that 1 crore investment.
Yeah.
You're doing your own kind of mini mutual fund, and this is happening right now.
Yeah.
Often when we talk about startup investments, a lot of young people visualize, oh, he's investing crores. It's not crores, it's about 5-6 lakhs, usually. There are people who choose to invest 10-15 lakhs if they really believe in a startup. And then definitely there are companies where they require a minimum of like 1-2 crores, but mostly it's in this 5-6 lakh range. You can begin your startup investment here. And what you're talking about, equity investing, is basically a version of what people refer to as startup investing right now. If you believe in the product that this group of people is building, then it's likely that your investment in that product will benefit you in the long term.
Yeah. So what if you don't have 5 lakh to invest? Because startups will not entertain 10,000 rupees from you, right? But you still want to invest in startup. What do you do that? Then you need to identify a company which is listed, and that company probably is investing in startups, and you buy one share of that company. Indirectly, you become shareholder of all the startups where the company is invested. Case in point is Naukri.com. Yeah, Naukri.com is a listed company which incubated multiple ventures, including Zomato. See the valuation which Naukri has created. In fact, I mean, we all know the story of Naukri.com. So by buying one share of Naukri, literally you have taken exposure in all the startups where Naukri has invested.
We all don't know the story of Naukri.com.
Oh, so Naukri.com, we know Naukri, right?
Yeah.
It's a very important
Yeah.
part of India's growth story, the best place to source the talent. And Naukri founder was very proactive and he started investing in startups from the earning which Naukri was doing, right? The name of the company is InfoEdge, the parent company, which is listed in the market. So Naukri used to make a lot of money and the founder was deploying that earning in various startups, exactly what you said. So they incubated companies like Zomato, right? And you know what has happened in Zomato? It has created tremendous wealth for all the shareholders. So Naukri made a lot of money. And that money is where? Inside that company. So if you own one share of that company, indirectly, you have also made money.
This is going to happen in the content creation world, by the way. Like, and this is parallel with the conversation about Web3 we were having.
Yeah.
But the internet is changing now.
Yeah.
We had an episode that will actually be out very soon after this one, which is centered around the world of Web3, crypto, blockchain. So basically, tech nowadays, like when we refer to software, any tech product is built using a certain coding language. It's built using a certain kind of raw material. Okay. Now imagine the future will use different kinds of raw material, different kind of coding languages, and it'll be able to build a different form of technology, different form of software. That's what people refer to as blockchain-based technologies.
Yeah.
And that whole ecosystem which will be developed will be called Web3. Now, there is a lot of opportunity, firstly, for growth in Web3. Web3 is going to be a whole other world. People refer to Web3 in many ways as metaverse. We're seeing with Mark Zuckerberg creating Meta, etc. Sorry, rebranding Facebook as Meta. Metaverse is a part of Web3, a big part of Web3. What people don't understand about Web3, and this is something a Web3 expert told me yesterday. He said that often you think that there are maybe $5 or $6 trillion companies in the world right now. You'll name Facebook, you'll name Google, you'll name Amazon, Tesla, whatever. But Web3 is going to open up the floodgates for opportunity to create 100 times that many number of $1 trillion companies. And he explained why. He said that there's going to be more transactions in the metaverse. Human behavior is going to change in more ways than you can imagine. Technology is advancing. For example, a very basic kind of explanation of this is when phones started becoming more advanced and they started building cameras inside phones, it kind of shut down the market for traditional digital camera companies. Case in point, Kodak, which was like the top company. Case in point, even I would say BlackBerry couldn't keep up with all the other phones getting better. Now imagine such a huge technological revolution is coming that human behavior, industries all over the world are going to be shut down. That's going to create so many new opportunities. There's a lot of money to be made. And the beautiful thing is that right now, often you'll see a lot of content creators also complaining about the algorithm. The algorithm doesn't support me. Or the algorithm did this to me. Web3 is not going to be controlled by algorithms. You will be on a level playing field with Facebook and Google. It sounds crazy, and watch out for that podcast when it comes out as well. I'm sure, sir, even the world of finance right now is fascinated by Web3 in many ways.
Everything is linked. And if you say that, I feel so disgusted when people say that I don't want to know stock market because I have nothing to do with it. And I say that, what are you saying? It is such an important part of our lifestyle, our future. So what you said that you met someone who told you about these things. People who are there in stock market, they have this quest of finding out what's happening new in the world because they need to find opportunities, right?
Can I list out some things which I figured from the podcast? And I feel podcasting puts you in the right zone.
Yeah.
I want to highlight two things. That startup thing I told you about, investing 1 crore across startups.
Yeah.
You might have the money. What you may not have is the opportunity which will come your way in terms of where will 20 correct startups approach you from.
Yeah.
So you also need to be out there.
Yeah.
And content creation podcasting has put, fortunately, my people and myself at that forefront of we attract the right opportunities because we're out there so much.
Correct.
I've also got the right advice from a lot of people at the top. And I can name a few industries which are likely to grow. One's lifestyle, like for sure, because people are becoming more health conscious. Sustainability is not 100% there, but it's catching up a lot. Environmentally friendly products, especially in the clothing industry, because people don't know that the clothes you wear, fast fashion, actually causes a lot of pollution. And Gen Z, Gen N is waking up to these things. The third big one is blockchain-based tech. That's what's really going to disrupt everything. And this we had an American VC, an Indian American VC, Kavita Gupta on the show. She is very bullish on blockchain-based technologies, and so is Silicon Valley.
Yeah.
People talk about AI and biohacking as the big changes in the future. Blockchain-based technologies are very close to us. It's going to happen over the next 3-4 years. We're already seeing it with this hype about cryptocurrencies, but that's literally the building blocks of the world of Web3.
Sure.
There's so much more that's going to come our way. Like even in the world of finance, the world of finance is very wide. There's the stock market, there's banks, there's the equity market. A lot of that is going to get chapoed, for lack of a better word, in the Web3 world. In terms of there's going to be a Web3 version of that. That creates so many more opportunities for different kind of businesses that are built using blockchain technology.
Right.
But anyway, that's what I wanted to highlight. That just keep an eye out for blockchain-based tech.
Yeah.
Someone had once told me that if you want to become a billionaire really fast, you build a tech product.
Yeah.
What they meant is you attach software with your business. So say you're selling fruit. If somehow you figure, okay, how can I attach software with this process of selling fruit? Are you collecting data about the fruit? Are you selling fruit through an app? Are you making the life of a farmer easier through software? Your valuation of your business goes up.
Yeah.
And if you own that equity in that particular software-based business, the amount of wealth you own also goes up. Therefore, people are like, try bringing software into your business. Try creating things with software. That is still true, and that's going to be true for the next 10, 20, 30 years. But also this whole aspect of blockchain.
Correct.
Understand how blockchain works. And this podcast is not about blockchain, but this is an insight into making money, right? Money will be made when you understand blockchain in detail, when you stay updated with what's happening in the world of blockchain, and when you stay updated with all the updates of Web3. And we've seen a massive update of Web3 with Mark Zuckerberg talking about Meta. He's currently at the forefront of culture. And if one of the biggest companies in the world is talking about Web3 and Meta, it's going to affect how the rest of the tech world also thinks about it.
True that. True.
Anyway, sir, go on.
So let me just, because obviously these things are very difficult for the last mile finance enthusiasts to learn, because these are like, because you interviewed someone and you got so much of knowledge, and you need to read a lot to reach to that level of knowledge which we have gained. Let me just give you a synopsis of how this investment cycle works.
Sure.
So when an entrepreneur starts the journey of entrepreneurship, the entrepreneur puts his own pocket money and friends and family and starts the business. Then the next stage comes where VC puts in money in the entrepreneur's business because they have seen the proof of concept. Can you invest at that stage as a VC with small capital? Probably not, because 10,000, 50,000, 1 lakh is not a very big capital to invest at a VC stage. But yes, you can participate if you have seen any company which is doing it and you are buying share of that company. I give you an example of Naukri.com. So from that VC, when it goes to private equity, which is they put a larger capital and they take higher stake in the company. Private equity is like big capital given to that company.
When does a company take a call of entering the private equity market?
So first stage is when product prototype is ready, so it goes to VC. And the second stage is when some revenue has already been showcased and the company is now looking to expand geographically. Yeah. So say I'm a regional Bombay-based fruit seller.
And a VC has given you 1 crore to grow your business in Bombay.
Correct.
You've shown that you've had success in Bombay, and now you want to say, now I want to go to India.
Correct. So there we need then private equity funding, because we are talking about revenue from say 1 crore to 100 crore, right? So 100 crore revenue will need a lot of capital to burn for your marketing, for team, etc., etc. So from private equity, it probably stays in the company for a long time, maybe for 4-5 years. And finally, the company aspires to become an IPO-able company. Like we had recently Nyka's of the world, which has come out with an IPO. And they have created wealth for all the investors who came into their ecosystem over a period of time. Now, right now, what is happening for a retail investor who wants to invest 20,000 rupees? The person can only invest in Nyka when the Nyka has decided to come out with an IPO. But by that time you are investing, the valuation has already gone up. So you are coming into the market at the I would not say the last stage, but at the higher value of this whole higher value of that value chain. So for an individual investor with a 10,000 rupees, obviously you can't make huge money because you come at the last stage of the value chain, right? But if Nykaa grows from here further, or any listed company grows further from here, then obviously you keep on growing with their growth. But your growth will not be obnoxiously high because you have taken less risk. The guy who initially gave first money to Nykaa was obviously taking maximum risk. So as an investor, investing in startups or becoming part of that early stage investing journey now in 10 years will give you far better IRR or return on capital than investing in only the listed space. Because you talked about startup and this whole new thing, that's why I thought
it's important for stock market investors also to know this side of the game.
Yeah.
That all this is also happening in the world.
Yeah. So most of the time, big money is made when you are investing in unlisted shares. And unlisted shares are also available, but these are not liquid markets. A listed one, which is like regulated by the SEBI and exchange NSE is there. So there, obviously, your risk of operations is lesser. But by the time they come and get listed, the valuation is done. Last point.
Sure.
Very important. So how do we make big money from listed shares? Because if the valuation has already gone to that level, you are in the last leg of the value chain. How do you make big money? Big money has been made when market goes down, crashes, because of some reason. 2000 market, in the year 2000, market fell because of .com crash. 2008 market crashed because of the housing bubble in US. COVID market crash because of uncertain event which happened. That is a time when you go all in, put your money in good businesses and you make big money because those businesses were valued here during the IPO, they then start becoming available at a lower price and then you enter. So I have done this empirical study that in your lifetime, you will get 4 opportunities.
And COVID was one of them.
Yeah. To make big money from stock market, 4 opportunities.
Has the COVID opportunity gone completely?
Obviously. Market has really outperformed. Now what you will make money is the final leg of making money. You will not make 3 times, 4 times of your capital, but you will make 15, 20, 30% of your capital depending upon the business you select. So I got 2008 in my career where I was able to make some decent money for myself. I got 2020 in my career. I have 2 more left. So I need to prepare myself for those 2 lovely years when everyone will be in despair and distress that, oh, market is going down. And I should be happy that market is going down. So now I can deploy my capital fully into the market.
Wow. That's...
It's a contrarian thought process. Huh? And big money is only made if you have a contrarian thought process. If you follow the herd, then you are going to a slaughterhouse.
It's crazy. Which is why you need to play that Dhoni game and just play a stable game until the World Cup where you go crazy.
Absolutely.
And the final of the World Cup, you make the team win.
Yes, because that is the day when you will make the difference. If you trade whole day, or if you just, be there in the market all the time because your neighbor wants you to be there, that's not a good strategy. That's a good way to remain busy. That's a good way to talk, showcase your so-called expertise of market. Because it's a great way to showcase your, flamboyancy that, oh, I know about the market. This is the in thing. But do you really make money out of it by just looking at the market all the time? Not sure.
Yeah. Want to highlight the Dhoni movie with the late Sushant Singh Rajput. It starts with a scene of Dhoni getting ready to go out to bat above his batting spot. And wickets had fallen very early on. I think Virat Kohli was batting that time. A very young Virat Kohli was batting. And Yuvraj Singh was supposed to go in. But Dhoni, which is Sushant Singh Rajput, goes to Gary Kirsten, the coach, and says that, I'm going up early. And Gary Kirsten says, no, it's actually UV's turn. And Dhoni says, no, I'm going up early. Showing bravery in the right moment. And then that's what creates legacy. That's what creates money. But the key is to keep that cool head and be ready to fight when that moment's
Correct.
When that moment comes your way. No one teaches you all these things in college. These are one of the hardcore career lessons you learn only through practicality. If you see the iron is hot, and if you want to make it big in life, you drop off everything else and you go for it. And you have like the guts to go for it also. And speaking about guts, I also want to talk about companies going public. We're seeing so many companies going public lately. Nykaa, Zomato. What I heard one of my nerdy finance friends say is that some of these stocks are actually not profitable.
Yeah, so these businesses are not profitable at all.
Yeah, as in
And in fact, there are some of the IPOs where the company itself is saying that we may not turn profitable. You remember Uber's IPO in US, where in their IPO document submitted to the regulator, they said that we don't know when we'll be profitable. So that's the new way of doing business. And people question that. Fair enough. People can question it because traditionally we have been taught that to become valuable, you need to generate profit. But the new way of doing business
it's
maybe
users.
is probably you need users, and the valuation is not reflection of the earning. Valuation is reflection of the future potential earning.
Yeah.
Right? I'll give you an example that say Zomato, which is a loss making, and today we say that it should not be valued. But maybe some US company who wants to come into India and do exactly what Zomato is doing, but they are 100 times bigger in US and they want to be present globally everywhere, they may perceive value in Zomato at that valuation because they know that it's far easier for me to come into India by buying stake in Zomato than going solo. So their perception of value is different. My perception of value is different because I have not seen this valuation in my life. So I will always question something which I have not seen earlier in my life. So do not question. My always suggestion to everyone is do not question market. Do not question market that what you are giving wrong value or you are giving right value.
Like aise kaise? Like
Aise
don't do.
kaise, haan. There is something, no, there, at every price. So stock Reliance is say currently trading at around 2,500 per share. If you go to exchange website, you see that price. At 2,500, there is a buyer and there is a seller also. Think about it. What a lovely price this is. 2,500, someone believes that the price should go up. And the same price, someone believes that the price will go down. So how can a buyer question the seller? You take care of your perception, no? If you believe it will go up, buy. If you believe it will go down, sell, no? But do not question what other people believes.
That's what the numbers never lie.
Numbers never lie.
Often I feel like the word overrated doesn't apply to anything in this world. Because what is the concept of overrated? You're seeing someone or something which is considered successful. Titanic, the movie. Lots of people love it. Some people will say, oh, it's overrated. Lots of people love Bahubali. Some people will say it's overrated. But it got success. It got numbers. It got a fan following. It proved its worth through real world success. You can't argue with it. And people should just take this overrated word out of their dictionary because numbers never lie, people never lie, people's behaviors never lie. Keeping that in mind, I also want to highlight that earlier in the podcast when we spoke about tech businesses being the big money opportunities for entrepreneurs, it is the valuation game. Most tech businesses are encouraged to focus much more on gaining and retaining users. Okay, so you build out a tech product, you build out a software, and if you're able to show that, oh, these users are actually using my app, my platform for so much time, it's okay if I'm not making profits because I've captured these users. And over time, if I'm able to capture them long enough, I can actually affect their habits, their thoughts. I get their data, which is what's happening in Web 2, which is what the social dilemma is about. And we're seeing that live. All these big companies we use, be it Google, Facebook, Amazon, we've used them for so long now. And they've added so much value to our lives, honestly, that they have our data. And they have changed our behavior. Like today, if you and me don't understand a particular topic, we pull out our phones and search for it on Google. If you and me meet someone at a party who's interested and you want to stay friends, we'll go on Instagram and search for their profiles. It's changed our habits. And this is what tech valuations are based on. Can you capture a group of people and can you make them think about your product? Can you make them use it? Can you change those people through your product? Because the ability to change human habit is highly valued. Eventually, you can turn that into profits. That's the theory. Like Uber, not profitable. But the long-term vision is that they will get every human being in the world to start ordering cabs through their phones and eventually become profitable. Maybe because by that point, you're so addicted to Uber and Ola that Uber and Ola will dictate the price of every cab ride and they'll make that extra 10 rupees as compared to what they would make early on.
Correct.
So that's the game for people who don't understand why tech companies are valued so highly, sir. And speaking about tech companies, what I love about what you're doing in your career is that you've learned a lot about finance, and I'd probably even say life from the stock market. You've learned about careers from the stock market, and you're applying it now in tech. You have some tech-based businesses. So I want you to take us through that journey also super quick. Like, what was that story? You learned about the stock market, you saw some opportunity, and you put two and two together and said, okay, this makes sense.
So every time you ask any entrepreneur this question, no, entrepreneur will say that I developed first this product for my need. For me, when I am active, still very active, but when I was very, very active in market, I used to use a platform called Bloomberg, which was created by Michael Bloomberg, and I loved the platform. And I read a book about him called Bloomberg by Bloomberg, which is a phenomenal book. A 39-year-old living his, Solomon partnership and then starting something on his own. It's an inspiring book. So I thought that Bloomberg is such an important tool because it gives access of information, data to an investor. But in retail environment, there was not many platforms who were giving that access. Because ultimately, market is all about information arbitrage. That if I have more information, I'll make more money. If you have less information, the chances that you will not make money is high. So what I did was to empower myself. I started working on StockEdge in 2015. It was for me that I need data. I know Bloomberg is shit expensive. I can't keep on subscribing to Bloomberg for me and my team. So I created StockEdge. And once you create a product which is satisfying your need, automatically that product becomes viral. Because it's a genuine need which is getting satisfied and other people starts relating themselves with you.
And that's the core idea of creating tech products. Create something for yourself.
Create something for yourself.
So what does it do? What does the company do?
So stock market is a place, as you said, it's full of data, right? And you need a simple framework to analyze the data, right? So StockEdge was able to create that unified, a simple database, which people who wanted to know about the data, capture the data, use that data to participate in the market, they started using it. So it's a database of stocks. So stock, financial data, market price, and all kind of. Plus, it also helps people to learn about market. So there are learning at every stage of the database. So what used to happen in other products is that they always presume that people know what they want to see. Whereas we presume that 99 people don't know what is it all about. So can we explain people? So while they're consuming the data, we also explain them this is the concept. Now that you have learned the concept, why don't you practice this data as per the concept you have learned? So it's like a hand holding to a new investor who wants to learn stock market.
In cricket terms, you're the data guy of the IPL team, plus the coach who's going and telling Ishan Kishan or Hardik Pandya that bat like this.
Correct. And showing him that data in a graphical format so that his mind can comprehend what I'm trying to say. With our minds, we don't like raw data.
Yeah.
We like graphs.
And stories.
And
direction. CTA. Do this.
Yeah, correct.
That's very cool, sir. Again, we got to bring it back to 2022.
Yeah.
What do you think the next year holds for, say, someone who's learned the basics of the stock market now? What should they be looking out for right now?
So as I said that the money-making opportunity, big money-making opportunity is gone. Because 2020 was the time when you would have gone all in and made a lot of money. So, but having said that, there will be opportunities to make money in the market. If you are investing, you can't look at 1 year, right? So you can't say 2022 mein kya hoga? Because when you are investing, it's a perpetual investment which you are making. So India coming 50 years is a great story. Because what we are, no one is there in this world. And the world has suddenly realized that, oh my God, we are underinvested in India. So let's put more money in India. Because of our population, because of China +1 thing where everyone wants to make an alternative to China also. And India is emerging as one of the alternative. So from an investing perspective, constant identification of businesses which we understand and we are confident about the businesses, that is required, and you keep on investing. As a systematic investment plan it out, 50,000, 50,000, 50,000, 50,000, so that you get the benefit. If the market falls, you get the benefit of averaging for your costing. And if you are trading, I think market is going to be very volatile. Typically it happens when market goes up like this, it becomes volatile for some time, and then it goes into a consolidation phase, which is like a flat, nothing happens. So till next, I am expecting 2022 will be very volatile. So be prepared for some active trading in the market.
Which is why we need to highlight the concept of temperament.
Yeah.
Like, deal with it, be calm.
Yeah, be calm. Yeah, that is the most important requisite. People run after strategies. Please tell me what works in the market, and I tell people that what works in the market is you.
I think what I like about people in the world of finance is that most of them think like, okay, let's make our money and get out of here, which is beautiful. It's a very functional way of looking at life. Those are the people who make it as long-term stock traders or long-term daily traders. If you've got a good calm temperament, if you see things for what they are, if you learn about the world in general, you constantly work on your skill set. And probably the fourth thing I've learned from you is that work on your people skills also. That can be an edge, as with the case for any occupation in life. One last thing I'd like to ask you, and I think I know the answer to this, is about your podcast. You run a finance-based podcast. And I'm sure this experience was slightly different for you because you're usually talking to people from the world of finance. And here we're doing this happy, random conversation also. Not that your conversations are not happy. I'm sure they are. But they're happy in a different way. You guys, because you'll come from that world of discipline. As a person, what was the reason for you to do a podcast? Because it can't just be numbers and YouTubing. I know what the podcast has done to my mind and my thought process. What's that podcast done to you, and do you think it's been one of your best career decisions, or where would you rank that?
Yeah, so definitely one of my best career decisions, because stock market is a place which has potential to so much learnings, and anyone can give you learning in stock market because everyone has a very unique style of participation in the market. I do a series called Face to Face in Elon Market's YouTube channel, which is my company's YouTube channel. I recently recorded a video with a gentleman who is from a village which is 200 kilometers away from Jaipur, and this gentleman is trading the market for many years, and that village has a population of 50-60 people, and he stays there. He has been trading the market using one of the most sophisticated science of market and making money. And I interviewed him, and I was in a state of awe that India is not just about Bombay or Bangalore or Delhi. India is everywhere. And to learn from people at remotest part of our country and presenting them to public in large and telling them that, listen, he can do it. Why can't you do it? Listen, so much effort this guy is putting it. Why can't you put it? So my podcast is also about techniques, because finally people want call to action that, okay, I've learned, but karna kya hai to batao. But also it's about inspiration. And we all are used to getting inspired from Rakesh Junjunwala or Ramesh Damani, who is an investor in my company, and other people. And they are like commodity. Everyone knows about them. But do we know Sharma ji from Jaipur, who is doing such a phenomenal work in trading? That is my core, that inspire people to do trading or investing the right way in stock market.
Everyone can be a Dhoni.
Everyone can be a Dhoni. That's always my first slide. You got to be Dhoni of stock market.
I'm glad. Speaking with you over the last couple of hours, I believe, I've noticed two things about you. Your eyes light up when you speak of your family, and and when you speak of the world of money and finance.
Yeah.
So you're in a very unique position where you're getting to work and live with the two things that you love the most in the world. So thank you, sir, for sharing all this knowledge and these learnings with us. This was one of the most insightful, like real world, actionable podcasts we've had on the show. And to the listeners, this is what the new flavor of the Ranveer Show will be. So if you liked it, share it with your friends. Comment. Ensure you give it a like on whichever platform you're engaging with, because it's your likes and comments that get us a better relationship with the algorithm. Thank you. Thank you, sir. Thank you to you too.
Thanks.
Looking forward to talking to you again, and looking forward to learning from you. I feel that because of your podcast, even you're not even 50% done with how much you wish to learn going forward.
Yeah.
So excited to meet you again, sir.
Same here, and I would love to say this that I've learned so much from you as well in this interactions. Thank you.
I'm glad. Thank you, sir. Thank you.
Bye.
So that was one stimulating episode of the Ranveer Show. You know, I used to always be scared of conversations like this when I was like 23, 24. And when I turned 25, I got extremely serious about my own financial education, about my own personal finance strategies. I used to just hear financial uncles talk about all these big terms and kind of get intimidated. I had to go through this whole mentality switch period where to embrace financial education based conversations by asking the stupid questions. Don't fear asking the stupid questions. And I hope that if there was a part of this episode that you didn't understand, that I failed to explain to you guys, go watch all our basics of personal finance episodes that we've created on the Hindi channel, on the English channel. Learn about personal finance and rewatch this episode if you have to. But get into financial education. Your future self will thank you for it for the rest of your life. Remember, your future self will also thank you following the Ranveer Show on Spotify. Every episode's available on Spotify 48 hours before it's available anywhere else in the world. Next up on the Ranveer Show, we have another aspect of the future of money making. We're going to be talking about blockchain, business opportunities, NFTs, crypto, with another very intelligent guest. I'm really, really trying to play around with the kind of content we're making on the Ranveer Show. I'm trying to make it richer, thicker, meatier, better, more informative, so that you guys get an edge in your careers, in your personal finance games, and an edge when it comes to how you guys look at the world. This is a beautiful TRS community we've built out, and it's only the beginning. Namaste. Thank you so much.